Hello, everyone, and welcome to my YouTube channel. Today, I have the distinct pleasure of having Noelle Acheson, who's Head of Market Insight at Genesis Trading. How are you, Noelle?
Very well, Daniel. Thank you so much for having me. Great to be here.
It's a fascinating world what we're going to be talking about, and to many of the people that watch this channel, it may sound a bit like the Matrix. So we're going to be talking about the crypto world, huh? And I would like to start by getting a bit of a definition from your perspective of what is the crypto world, what does blockchain and the different decentralized systems mean? Just a little bit of a summary for our viewers.
Yeah, you do start with the hard questions, don't you? Because the reason it's a hard question is that it has grown so fast over the past few years, and it has expanded to such an extent that it is becoming increasingly hard to define. But I'll try and pull on one thread that I think most people will be able to relate to, and that is that blockchain technology basically redefines what we mean by ownership in the digital world. In the digital world, ownership is somewhat a vague concept. I mean, you're playing a game, you own your avatar, I think you do. It actually probably belongs to the platform itself. I mean, Danielle, these videos that you do you own them or does YouTube own them? Can you do what you want with them, or do you have to ask YouTube for permission? So ownership in the digital world has sort of changed our understanding of what it means. It's easier to understand in the blockchain context. Curiously enough, if we come at it from a different vector, from the physical world understanding of ownership. In the physical world, ownership basically means unlimited access. You own your car, that means you have unlimited access to that car. You own your apartment, you and only you have unlimited access to that apartment, or you and anyone else that you choose to have access, anyone who has the key, for instance. And it's similar in the blockchain world. If you own Bitcoin, you and only you have access to that Bitcoin, or you and anyone you choose to share your key with. In the physical world, that unlimited access is often enforced, or was always enforced by contract law and then physical force if necessary. For instance, you own your apartment, but let's say you get home one day and some big bad guys with guns have smashed the door in, they put up a new door and they've changed the locks. Do they now own your apartment? No, you then take them to court and you win, and then bigger guys with bigger guns show up and they kick the bad guys out. In the blockchain world, that's obviously not going to happen because there are no contracts enforcing the ownership. The ownership is enforced by code. And that sort of also starts to change how we understand ownership. Ownership in the blockchain world, like the physical world, is unlimited access. But in the blockchain world, you don't have force to enforce that. It is enforced by code. And that has a whole different range of commutations as well, which we can get into. But that's the basic premise of blockchain technology. And when it comes to financial assets, again, the ownership is very important when it comes to finance. You know this better than most, Tanya. But bearer assets that are liquid and trade on exchanges around the world are slowly changing how we understand or how we glimpse capital markets can be going forward. And I'll stop there because otherwise I could go on for ages.
So when you talk about ownership and you talk about decentralization and what disintermediation means in blockchain, what is the benefit then for the general investor, for somebody, for the general public? What do you think is the benefit if ownership is a different perspective than what it is in what we call the real world?
I love that question because it gets to the heart about why I care very much about capital markets and why I do what I do. I've been covering the crypto asset space now for about 6 years, I think it is, with a focus on its impact on capital markets, because capital markets is about distributing opportunity, basically. And we can all agree that these days it's not quite so much about that. Seems to be more, we're increasingly about gatekeeping access, and there may be some good reasons for that. That's a whole different video, if you like. But when it comes to the disintermediation is a better term of the access to these particular types of assets, to digital assets. And that is about a broader access. You don't need to ask permission to buy Bitcoin or Solana or Dogecoin even. It is entirely up to you what you do with your investments. Obviously, there is some protection that is needed, but living in a world in which retail investors are told that what they can do with their money, they're denied access to some potentially high return opportunities. The already wealthy are not denied access to these same opportunities. And so capital markets in that respect, under the guise of protection of the retail investor, end up becoming more of a tool for increasing inequality. And there are steps being taken to mitigate this and wholeheartedly support them. And I may sound like I'm against decentralization. I'm not. Against centralization. I'm really not. Centralization is very efficient and necessary in most of the capital markets that we deal with on a daily basis. But the idea that these markets have emerged from the ground up, true grassroots growth here, without asking permission of anyone, granting opportunity to anyone who wants to step in and take it, that gives an exciting glimpse to what could become of capital markets going forward. And again, I repeat that this does need to be watched, and some investors do need protection. But on the whole, access, like we talked about in the beginning, ownership equals access. I should actually have said at the beginning, if you don't allow me to say this now, that everything I say here are my opinions, not those of my employer, Genesis Trading, and obviously, especially important when it comes to crypto assets, nothing I say is investment advice.
Of course, we will make that in the reference as well. Put that also in the reference of the video. So, in a nutshell, what are we talking about? Are we talking about the democratization of the investment world? Is it basically just a way of making everything simpler and more affordable for everybody, or is it more than that? Is it also about disintermediation, generating a much more efficient way in which we look at contracts and about ownership, by which everything is, you take away all the middlemen that basically add inefficient steps to the system? Is that what could be a summary of what we're talking about?
That was the original idea. I'm smiling because it is such a complicated question now. That was the original idea. Crypto markets emerged precisely for that disintermediation that you mentioned. Look at the crypto markets today, and they are dominated by a handful of what we would call centralized players. Not exactly regulated players yet, because the regulation is still something that is being sorted out, but certainly licensed, centralized participants, centralized market infrastructure providers. And so many of the original believers in this particular disintermediation, and I think I include myself in there as well, will look at the markets today and say, this is not what we came here for. I'm not one of those. I do believe that the institutionalization of crypto markets is essential for their acceptance and for their potential mainstream impact, and for the chance that they have, as I mentioned at the beginning, for them to impact how capital markets function. I don't believe they can fight or reform capital markets from the outside. I do believe they can do it by forming part of the established capital markets infrastructure, and we're seeing that happen. Starting in Q4 2020, we saw the institutionalization of this industry, not just institutional grade market infrastructure emerging. And Genesis Trading is an institutional only platform, and we've been going since 2013. But to see some of the big players come in, to see market infrastructure providers list on NASDAQ, to see the largest institutional funds in the world start to invest in this, hiring Bitcoin and other crypto analysts, is a big sign of validation, acceptance that this is real, that it's not going away, as well as an interest in, one, how can you make money out of this? And there's a lot of money to be had, but also how is this going to disrupt the business that I'm in? This is from the point of view of the traditional financial service providers. So disintermediation of innovation, I think, is perhaps the best way to look at it now. Definitely disintermediation of innovation. Don't need to ask permission to try something. Not everything succeeds. A lot of the stuff is scams. And yes, we do need regulation to enforce the penalties for that. But the disintermediation of innovation is helping this whole industry to evolve at a space that people like myself, who are really working on this almost 24 hours a day, 7 days a week. Okay, we take some time to sleep, but not enough. We can't keep up.
So what are we talking about? Are we talking about the end of commissions, the end of endless paperwork for transactions, the having to wait 24 hours, 48 hours a week for the validation of an acquisition? Is that basically what this ends up doing?
Potentially. It depends, again, on the type of assets that you're talking about. There are some funds, for instance, some crypto-based funds, and if you happen to choose to put your mind to them because your broker enables that, facilitates that transaction, or because you're more comfortable only dealing in listed funds, then that could take some time to withdraw your money. But in the, I guess, the original type of crypto markets, of which there are many very liquid examples today, then transactions are done in a question of seconds, and you can withdraw your money in a question of minutes. And here's another thing, Dania, they trade 24/7, 365. There is no one to say, all right, we're going to take weekends off, or you get Christmas off. There is no central authority to set trading hours. This is one of the reasons, this is pretty overlooked actually, one of the reasons that crypto is so volatile. There's no such thing as circuit breakers, because
Sure.
Who would decide that?
Exactly. So it's the end of call your broker. No, it's
Yeah.
it's
Yes.
the end.
In theory. Yeah, I say in theory because I don't know if you've heard a lot of the rumblings in the crypto industry about how we need an ETF. Yeah. And how we now have an ETF, but it's a sort of pseudo ETF, which is based on the CME traded Bitcoin futures. And let's not go into whether that's a good product or not. That's a different conversation. But there are many that feel comfortable with that centralized approach. Let's face it, it's kind of reassuring to have someone on the other end of the line for you to call when things go wrong. And in such a new technology as crypto assets, things go wrong quite often. Dealing in crypto is kind of clunky, getting better all the time, but still kind of clunky and very nerve-wracking if you're putting a stupid amount of money in there. So many people prefer the broker access. That is becoming increasingly accessible in the United States with this ETF. There are many mutual funds as well in Europe. Things are much more fluid here. There are many listed funds that are available for retail investors, not just based on Bitcoin, but on much smaller assets as well.
So when we look at cryptocurrencies, the metaverse, the different names of each of these assets, what ultimately are we thinking of? What is how do we think of value and opportunity in cryptocurrencies, for example? Because many people view cryptocurrencies as a response to the monetary policy of central banks, as a way to find a currency that is not subject to the imposition of money supply from a central bank and interest rates from a central bank. But at the same time, there are thousands of them, no? So for somebody who's looking at this universe and starts to think of cryptocurrencies, what should that person be looking at in order to understand opportunity, value, and obviously risk, no?
My advice would be just look around at what's happening in the world today. The inflation narrative has been a big boost for Bitcoin. It's not beat about the bush. And Bitcoin has been held up since the early days as digital gold. It's scarce. It's provably scarce, unlike gold. Again, that's a different conversation. And so therefore, Bitcoin is going to be a better gold, especially one much more attuned to the digital needs of the next investing generation. But here's the thing. Bitcoin has never had any inflation until this year against which to test that thesis. And lo and behold, this year we are seeing inflation, and few of us think it's going to disappear anytime soon. But Bitcoin is not behaving like the inflation hedge we thought it would because of its scarcity. And why is that? A whole lot of reasons, including the institutionalization that I mentioned before. Bitcoin is now held by many macro portfolios as a risk asset. Therefore, it is going to behave like a risk asset along with many of the other tech stocks, et cetera, et cetera. That is one story that is bringing a lot of new investors into the digital asset space. The theory that still holds in theory that Bitcoin is a good inflation hedge. And let's be honest, gold hasn't really behaved like an inflation hedge this year either. So longer term view, yes, an emerging inflation hedge if you prefer. But that's one way to look at it. If you prefer to look at the changes in society, how we interact with each other, what the younger generation spend their time doing. In other words, if you are watching how we are becoming an increasingly digital culture, then that's a whole different way to come into the crypto asset space. NFTs. Now, most of your viewers have probably heard of NFTs. Maybe they don't fully understand how they work, or maybe they don't fully understand the point of them. That's a different, we can do a whole video on that if you like. But NFTs, non-fungible tokens, represent whatever the issuers wish them to represent. And they started out representing artworks. Whether you like them or not is a question of personal taste. I happen to very much like some of them. Would I spend $10 million on one? Probably not, but that's just due to my personal budgeting, I guess. But NFTs are a way for the digital generation to embody self-expression while exercising digital ownership. Sure, we can copy photographs and we can put them up as our Twitter avatars if we wish, but it's not the same thing as ownership. That's one way. If you believe that our lives are going to become increasingly digital, then NFTs are going to become increasingly the main form of self-expression of the digital generation. Now, NFTs applied to, again, something that we're hearing a lot about, which is why I say look around, Metaverse. Yeah. NFTs apply to the Metaverse or to decentralized gaming. I mean, it would surprise your viewers to learn that I am not a gamer, but I am very, very interested in the impact that gaming is going to have, not just on how the younger generation, perhaps not so younger generation, spends their time, but also how economies emerge. There are new games that are emerging that allow their players to earn a living. At a time in COVID, when many people are locked inside or have lost their jobs, they can earn a living by playing a game that in turn is owned by the community. And at the same time, these new games, these new types of NFTs are making very significant cultural statements that ties in to so much of the cultural trends that we've been seeing.
This is very interesting because ultimately, I think that what happens is that all of us, particularly me, who live a very analog life, we find this very disconcerting, very difficult to understand, and very almost science fiction, if not completely science fiction. But what you're talking about is something that is very real for people that are in younger generations that live in a much in a completely different reality in terms of what they do every day, their interests and the culture. And I'm interested about what you just said about NFTs, non-fungible tokens. Is that many people, when they talk about cryptocurrencies, non-fungible tokens, the metaverse, etc., they're talking about things that they look up on Google or they look up on the internet, and they see that they have gone through the roof in terms of value. But it's not about that, is it? It's about expression, and it's not necessarily because there's going to be a tremendous prize for one. There might be an NFT from a rapper that is extremely expensive. That doesn't mean that all NFTs are going to be very expensive. So how do we discern between things that are, let's say, you mentioned before, financial assets, and the ones that are a new form of expression within the digital world?
Here's where I start to get really excited about the potential, because again, you asked the question, how do we discern? And here is one of the key aspects of crypto assets, be they Bitcoin, be they Ethereum, be they NFTs. They're transparent. they trade transparently. Blockchains are open. Anyone can see the data. Anyone can see the transaction history. They can see who bought when and what price and whether they're holding. What are they doing with this? That amount of information is something that's inconceivable in traditional markets. So we discern by looking at the data, and there is an incredible amount of data. Sure, it's not that easy to understand. There are an increasing number of services that are emerging to help us understand this level of data, but it's there. It's free if you know how to read it. And even if not, it's affordable, unlike most of the granular data that drives traditional markets. That's slightly going off track. Back to what you were asking, which is basically what kind of things are we talking about here, and how would people get their heads around what is emerging? And you know, to disclaimer, it's actually hard to get your head around this because this is all emerging so fast, and it does require a certain rewiring of how we understand value, as you mentioned, how we understand transactions, how we understand ownership, as we talked about in the beginning. I'll throw out a couple of examples. One of the leading blockchain-based games at the moment, if not one of the leading blockchain-based game at the moment, is something called Axie Infinity. I don't know if you've heard about this, but Axie Infinity is similar to Pokemon. You probably remember Pokemon from when your kids were younger. Similar to Tamagotchi as well. It's now starting to get some of the Animal Crossing characteristics as well. And basically you have NFTs that are these little Axie figures, and each one is different, and they're really cute, and some of them have balloons and some have flowers. And one sold this morning, I was looking, someone sold this morning for $60,000. You need 3 of these NFTs to play this game. Okay, most are just about 1,000 or so, but this goes to show the difference in pricing. How do we know this? Because they're transparent. They trade in transparent marketplaces. But back to the game. You need 3 of these Axies to play. You win a token by playing. This token trades on liquid marketplaces, so you can earn hundreds of dollars a day just by playing this game and winning these tokens. And here's a really interesting, there are 2 interesting features about this, if you'll bear with me for a second. The token that you win, one of the tokens that you win by playing this game, is called the Smooth Love Potion. I am not exaggerating. This is safe for work here, because also what you can do with these Axies is you can breed them. And what you do is you take 2 of your Axies, whichever 2 you want to breed, you apply Smooth Love Potion, perhaps a bit of soft jazz and candlelight if you really want to get them in the mood, and you get another Axie. And then you can accelerate your play by putting more Axies in the game, earn more money that way. Now, here's 2 fascinating subjects on this. One, the SLP token, the Smooth Love Potion token, is increasingly being used as a currency in the Philippines, where the adoption of this game is off the charts. It is being accepted as a form of payment by cake stores, by auto repair shops, by massage therapists, by dentists, by local corner convenience stores. And what we are witnessing here is the emergence of a new type of currency, not because someone decided that it should be so, because the people want it. That is a fascinating twist on the impact that blockchain-based games and the metaverse in general can start to have on economies. And another twist to this whole thing is these NFTs, these Axies, some of which can go for as high as 60,000. Many investors are buying these as investment assets.
Yeah.
And they can then breed them and get new Axies, which can be considered a dividend. They can also lend them out in what is called a scholarship program. I can't afford an Axie, I will borrow one in a scholarship program, and I will give the owner a cut of my earnings that I get through playing with this particular Axie. So that's, you've got your dividends from the little baby Axies that grow up really fast, you've got your yield from the cut of the earnings. So does that make these game avatars securities?
Yeah, absolutely. Well, it's incredibly fascinating, but I would like to play devil's advocate here, no? And think, okay, so you're basically telling me that people are paying $60,000 for a piece of software that is going to be used by a dentist in the Philippines as a next transaction, no? So how do I not see that as a bubble?
It may be a bubble. I mean, let's be honest, it may be. And in fact, the price of the SLP token has plummeted by 50% over the past month. To be honest, I don't really know why. I haven't had time to dig into the data. I suspect it's because competition is emerging. Other types of play to earn games, there's an entire category now, play to earn games, are emerging with new types of assets that can be used for investment. Does this mean that investors should stay away because they could be a bubble? Perhaps. Or could it perhaps imply that maybe a diversified portfolio is a much better bet? Again, this is not investment advice, obviously, but also in terms of the bubble, like it depends, bubbles always get transformed depending on the time frame over which you look at them. The Axie token, the token that sort of powers this whole blockchain-based games, is up something like 18,000% so far this year. The SLP token, the one that has fallen 30% over the month, is still up. I forget the exact number, but hundreds of percent so far this year. Is this a temporary fall, or does this mean things are over for Axie? When something has become such an embedded part in the economy, it's unlikely to be over, especially since, and here's an interesting feature also, it's owned by the community. There are some developers that are working on additional types of activities and interaction. Land sales is one of them. That's going to increase activity. They're working on a way to allow users to design particular types of games. In other words, user-generated content that everyone else in the entire platform can then go and use. And all of this investment, the investment in land, the investment in developing games for this open source platform, does not run the risk that most of the game platforms that we are used to so far run, and that is that the owners could pull the plug, or the owners could change the rules of the game in their favor, not that of the users. When a game is owned by the users through ownership of this Axie token, and the users can kick out the developers if they believe the developers are doing a really bad job, then that changes the dynamic between investors, users, and the developers, and probably would make these things more durable in that there would always be somebody willing to tweak it, to launch something else, to continue to be part of this metaverse that is increasingly forming parts of people's lives.
I think that is the key now, isn't it? I think that what you've just said is that because it is not an asset that can be inflated away by a person or a group of people or using legislation or using regulation. And because it's owned by everybody, it might be volatile, but it doesn't have any of the principles or of the characteristics of a bubble. No, it's a completely different thing. So the other thing that I find interesting about this is how it's moving into a world in which the level of exposure or the level of time required for investors or for the people to be involved with in order to understand it is quite significant, and that has a value. Know that therefore, if you want to play a game but you don't have enough time to collect the tokens that lead you to the next level, you can always pay somebody to give you that token, and somebody's earning a living from generating those rewards or tokens or however you want to call it. So it makes it a very unique democratic process in which if it's a bubble, it'll implode very quickly. And if it's not a bubble, in any case, the underlying trend is unstoppable. Am I wrong in viewing it this way?
That's such a good point, Danielle. It really is. And let's throw in there also just the transparency behind all of this. We know that many bubbles that we have witnessed over the years have been because of misinformation, often fed out into the market, sometimes by the originators of a particular project, sometimes by those that hold a lot, just want to see the price goes up. Misinformation. That's not possible with blockchain-based games. Sure, you can lie a bit and talk about, I promise we're going to do this, and then not do it. But on the whole, the transparency is one of the guarantees that this is indeed working, that there are indeed users. And we're talking hundreds of thousands of users. I mean, Axie itself is generating, so far this month, something on the order between $10 and $20 million a day in sales, just of the tokens and of the NFTs themselves. That's not insignificant, a day. And when you talk about the delegation, this is something that I've been thinking about recently. I've been very intrigued to see the growing institutionalization of the NFT space. We mentioned before the institutionalization of crypto markets, and we know this by the big funds coming in, the market infrastructure providers. We know Bank and BNY Mellon are launching custody services this year for digital assets. But going back to NFTs, grassroots, right? Individual ownership. You like this art piece, you can buy this art piece, okay? And the art pieces are going for exorbitant amounts of money, but let's face it, there's a lot of very rich people in the crypto industry now, thanks to the appreciation of the tokens. We are starting to see the institutionalization of the NFT space through some institutional funds that are springing up to invest in this. And I'm not just talking about NFT related businesses, although there's plenty of money for that as well. I'm talking about investing in the actual NFTs themselves. Bitwise, which is one of our leading fund managers, they manage in the digital asset space. They manage several listed products based on crypto assets. They launched earlier this month an NFT, an investable NFT index, where you can bet on the floor price of different series of collectibles, such as the CryptoPunks or the Bored Apes. And here's something really interesting. If the institutions are getting involved, then that starts to change how we see custody, because what are the institutions going to do? Just park them in their custody provider wallet? No, they're probably going to want to, as you hinted at, maybe get some additional yield by using these NFTs maybe in games, and hiring a bunch of gamers to actually earn them extra yield on these assets. And just think of the, and not to mention the branding, just think, Daniel, of the audience that a BlackRock versus PIMCO Axie battle would get.
That would certainly have an audience. Absolutely.
You'd sign up to watch it, wouldn't you? I know I would.
It would be very interesting. When you look at cryptocurrencies, one of the things that is sort of a generalized view about cryptocurrencies is that they become a widely used means of payment for the digital world, for this new universe that we're talking about, etc. However, one of the big elements of value of cryptocurrencies is the fact that the supply is limited relative to, for example, any currency issued by a central bank. Yet, there are thousands of cryptocurrencies. What do you think is the ultimate sort of end game for cryptocurrencies? Will we see most of these cryptocurrencies disappear and a few of them become the norm? Or do you think that is actually the opposite? I've heard from some other people that it's actually the opposite, that what we are likely to see is a lot more cryptocurrencies that are used for different purposes.
Both. I'm going to go and say both. And part of it is the transparency that we talked about before, but most importantly, and this I get really excited about, Danielle, free markets. These are truly free markets, and the market will decide. You're right, there are thousands of cryptocurrencies. Last time I looked, it was a while ago, there were 5,000 or something like that. But the top 100 in terms of market cap account for, I think, 98% of the total market cap. So it's already pretty concentrated. And if you go to the top 10, then that accounts again for most of the market cap. So both in that many will disappear because the market does not find their use case or economics compelling enough. But I do not believe we will end up in a world in which it's just Bitcoin and Ethereum, for instance. I do strongly believe we will end up in a multi-token universe. And hopefully, I say hopefully, with the continued access to innovation, permissionless innovation, hopefully new tokens will be emerging all the time. And then the market gets to decide what sticks.
I think that is the key difference, no? I think that what makes a currency, money, is ultimately to be means of payment, reserve of value, and a unit of measure. And the great thing about it is that is never decided by the government or by a regulator. The government can say that the official exchange rate of a currency is X, but nobody believes it because they don't use it, and they obviously don't trade at that exchange rate. We've seen it all over the world. And in this particular case, I think that because of the enormous number of layers of this digital world, that the use of a currency is much more similar to that of the what currencies have been throughout history, when some villages used pieces of wood or different tokens, no, to make their transactions as a form of payment that is accepted within that particular universe. My question would be, that is basically, in my view, from what I'm getting from you, is that the more this develops, the more difficult it makes it for it to be intervened or managed by a group of people, no? Because at the moment that it loses that democratic sort of environment, then everybody's going to go elsewhere. But what are the biggest risks that you see of some kind of, I don't know, impossibility of understanding where your security is as a user of these different universes?
Ooh, so many threads to pull on there. Decentralization is important for the value that users ascribe to currencies, but there's a but in there, an asterisk and some parentheses. And before I head into that parentheses, Bitcoin, for instance, is truly decentralized. There is no one authority that can control either the code deployed on the network or the price, or even there is no one single authority that could ban it efficiently, would just simply move somewhere else. That is truly decentralized. And other cryptocurrencies, not so much. It is an important factor to watch, the Gini coefficient. And many of the data providers that I mentioned earlier, they do offer this as one of the metrics. Now, heading into that parentheses that I talked about, there are some cryptocurrencies that are in the top 10 even, that are much more centralized than Bitcoin. But the users understand that risk and they accept it, that disadvantage, if you like, that perhaps is too much, very opinionated there, that risk, I guess. And they accept it as a trade-off for perhaps higher throughput and lower transaction fees. But they do so knowingly. And this is the multi-chain, multi-token world that I think we will head into. There will be no one winner, no winner takes all, if you like. There will be many, each with different use cases, different advantages and different disadvantages, and the users decide. There are some very successful platforms that are focusing on replicating NASDAQ in the decentralized, disintermediated way is a better way of saying it. There are others that are much more focused on NFT transactions in a disintermediated, low-cost, high-throughput way. Bitcoin and Ethereum would not be practical for most of the transactions that are happening, both in the NFT world, decentralized finance world, and also the gaming world, because of cost and because of the relatively slow settlement times. Other blockchains are emerging to compensate for those perceived weaknesses, and they also have disadvantages that users accept as a trade-off. Those that insist on pure decentralization will probably focus on Bitcoin. Those that understand that real world is complex and that we have never, as a species, ever been good at knowing what new technologies will be used for, they're perhaps willing to experiment with some different parameters.
Yeah. I mentioned yesterday to a few friends, now when they were saying that cryptocurrencies are very volatile and that they fall a lot, I mentioned what is riskier, no? The Argentine peso or Bitcoin or Ethereum, no? The uncertainty of whether something is going to go up a lot or the certainty that something is going to go down every year, that's something that is making the dialogue and the conversation about cryptocurrencies very different for people that, like yourself or myself, live within a context of relatively stable global world reserve currencies, no? But for people in emerging economies that are seeing their currencies devalue on a yearly basis by 17, 20, 30%, or even or a lot more, if in the case of Venezuela or Cuba, you've just mentioned a few elements that have made a lot of people be able to survive, no? For example, people that are playing a game and earning some different currency from that work, precisely in a completely different world. One of the things that I get from what you're saying is that we're focusing too much on the volatility of the assets from a financial investment perspective, but we're not focusing enough on the radical change that this means. What else can we expect in the near future?
I love that you asked that question. It shows that you really are taking a step back and looking at it as a whole. I confess to getting frustrated when I hear people from their very comfortable seats in Western Europe or North America say Bitcoin will never be used as payment because we have so many better options. But that is not true, as you mentioned, for much of the world. Bitcoin, slow and expensive as it may be in relative terms, is perhaps better than what they have at the moment. And we're seeing that already happen in economies like Venezuela. El Salvador is obviously a good case. Going back to the volatility aspect, risk is something that we need to re-examine. Risk has been taught to us at school and through all of the investment learnings that we've done since, that risk is bad. And risk and volatility go hand in hand, right? But you never hear people talk about upside risk, do you? Volatility is necessary if you're going to get high upside returns. They just don't exist without that kind of a risk. And yes, can go up, can go down. You and I have a certain, or at least I won't speak for you, I have a certain mindset when it comes to thinking about risk in terms of investments, because we used to have safe assets and they produced a yield, and so they were wise investments that were going to see us into a very comfortable retirement. Well, that doesn't exist so much anymore, and the younger generation that are going to be taking over from us have a very different attitude towards risk, partly because of what they've seen since the great financial crisis, but also partly because they were born in the digital age, they grew up alongside crypto, and they don't see crypto's volatility as a bug, they see it as a feature. This is something shared by institutional investors. Bitcoin and other crypto assets are part of macro portfolios precisely because of their risk. Now, stepping back even further, looking at the sort of global setting, if you like, we saw what happened in El Salvador. And Nayib Bukele decided that making Bitcoin legal tender in that country was going to, one, perhaps reduce the influence of the United States over the country's monetary policy, and two, risk in economies that have very high inflation does, as you pointed out, have a very different connotation. And I expect, this is my opinion, not that of my employer, that we will in 2022 see other nations take steps towards accepting that Bitcoin is not just a feature of the financial payments landscape anymore, but for the first time in our history, a choice when it comes to currencies. For the first time, users around the world have a choice as to what currency they use. And I'm using currency in the air quotes determination here because the definition can be debated. But if you and I wanted to transact in Bitcoin, we could. There would be no one that would stop us. And you would probably find that if you wanted to send a payment to someone who lives on the outskirts of Kibera, the slum of Nairobi, because this person had translated something for you, perhaps, you could. Sending this person dollars would end up being very expensive. If you wanted to send money to one of your sons who might be building an orphanage in Pakistan, it's very likely that your bank would tell you can't. Whereas using some of these disintermediated payments platforms based on blockchain networks using cryptocurrencies, that kind of freedom, that kind of agency becomes much more accessible. Obviously, money laundering, financing of terrorism, very big concerns. But there are forensic tools now that, while they may not be very popular with the original crypto set, who's all about financial freedom, they are necessary because we can agree that stamping out crime on these networks is important. But it's the freedom of choice that is the main thing that the growth of the crypto networks offer users around the world, whoever you are.
That is it's incredibly fascinating, all of this. One thing I wanted to touch upon is this idea that crypto assets and the crypto world is environmentally unfriendly, because we hear that quite often. What would you say to that?
I would say, this is an argument I hear a lot, so I'm trying to think which objection to that argument do I come out with first. First of all, saying that crypto assets burn too much energy, let's use Bitcoin because that's the one that's most often cited. To say that Bitcoin consumes too much energy, that's a judgment call. What exactly is too much energy? How much energy is spent watching the Kardashians on Netflix, and which gives a better value to parts of the world that do not have access to that kind of thing. So saying too much is always a value call, and it overlooks the technological development that Bitcoin mining has been undergoing over the past year. One, the migration of Bitcoin hash rate, Bitcoin mining power, to North America once China clamped down, is increasing the predominance of renewables-based mining. And two, this totally overlooks the economic incentives to build renewable plants with Bitcoin miners as load distributors, as load bearers. It changes the economics of the equation, and that way Bitcoin and other cryptocurrencies can indeed help with the greening of the network. And two, as we've seen in places such as Texas and California, grid outages often happen because there's not enough capacity to deal with high demand, and there's not enough capacity to deal with high demand because that's uneconomical the rest of the year. The Bitcoin generators, that becomes economical. And we are seeing an increasing number of traditional energy producers set up Bitcoin miners in their parking lot. Okay, figure of speech, but they actually are setting up Bitcoin miners in their parking lots to help make energy generally much more efficient. That's not even going into the impact that Bitcoin mining is having on gas flaring.
Obviously, I think that one of the things that we tend to forget is that technology always ends up being energy efficient. So you might, to think about it from a static perspective, now this is what it consumes now, assume that is the consumption per unit and it's going to go multiply tenfold. No, that doesn't happen. No, it doesn't happen with what we're using today here to have this conversation, and it didn't happen in the past. I think that also one of the things that I get from this conversation is that the value of some of these assets in the marketplace may go up or down, but the breadth and the extent of the universe that we're discussing is simply in a very initial stages to start with, and growing very rapidly and exponentially, and it's just going to continue to go that way. And somebody was mentioning the other day the risk of bubbles. Well, I say one of the reasons why we have cheap internet today is because of the internet bubble. Yeah. Exactly. So we forget sometimes that the burst of a financial bubble is not the end of a technology, rather the opposite, no?
Because it forces adaptation, and adaptation, as you know, is the key to survival. And Bitcoin, I use Bitcoin because it's the oldest, it has seen many booms and busts. It's gone up and it's come down. We've seen the most recent one, in fact, has been just last year, was in sort of languishing for quite a while, then it started heading up fast. Will it come down from here? Maybe. Again, I'm not going to give any investment advice, but the building has never stopped. The building has perhaps waxed and waned with the price over the previous cycles, but I do not see that happening now for two reasons. One, there is a much broader acceptance that this technology is transformational on so many fronts. We talked about the financial aspect, we talked about the cultural aspect, and there's identity. There are so many other things to pull this technology in for. That, plus the rather ridiculous amount of money that's sloshing around looking for a potential home, has led to some exorbitantly high funding rounds for crypto-based companies, and I don't see that dying anytime soon. So the building has never died, and it especially will not die should the crypto markets collapse again, which, let's face it, they will eventually at some stage. The question is, how high will they go before there is a big correction, and then how big will that correction be, and then how high will they go the next time, and so on and so forth. It's the building that we have to keep our eye on, and that has picked up, that is accelerated to I will say, an exhausting pace, for those of us who try to keep up with it.
It's very interesting because I think that we in our day-to-day lives and our conversations and in our culture, we don't discuss whether paying hundreds of millions of euros per year to a football player is a bubble. Yet we find that paying 10,000 or 60,000 for a token is a bubble. And interestingly enough, the first transaction is not decided democratically. The second one is, no? So that is an interesting process that you're telling me. This is an incredibly complex world. But if you were to say to someone that's interested, that is watching this and says, wow, I think that this might be something to look at, but how do I start?
Yeah. That's a very good question. Mercifully, there's so much great educational content online. Google search. In fact, I was looking at Google Trends this morning for various things, that Google searches are continuing to go up, which shows growing interest, not just from mainstream investors, but also from professional investors. This is something that we, Genesis Trading, are dealing with on a daily basis, growing interest from the professional set. So there's plenty of information out there. I can't, top of my head, think of any great ones, but there are many media sites that just focus on this particular industry. Keep an eye on them, keep an eye on the news. There are many investment houses that publish great reports. At Genesis Trading, we produce a monthly review of what the trends from the previous month mean for the evolution of the industry. But just read, start reading, ask questions as well, talk to other people. There is so much free information out there that not learning about the space is a choice rather than being able to say that I haven't found anything interesting.
Yeah, the information is definitely out there, and one of the things that is amazing is when you're interested, how quickly you get immersed into in this universe, and a lot of information is there, and obviously it is your choice, to decide.
Absolutely.
Whether
Once you start learning, as you said, it becomes more and more compelling. In the industry, we call it going down the rabbit hole, because once you start, you cannot find your way out. It is one interesting thing will lead you to another interesting thing. And the more you know, and I can speak from personal experience here, the more you know, the more you want to know. And the industry itself is evolving so fast that you will never understand everything. I personally find that exhilarating, one of the most fascinating parts of what I do.
Oh, absolutely. I think that one of the things that we tend to forget is how great it is to be learning about things, even if you are going to decide not to use them. Again, I come back to the point, it is your choice. This is not investment advice. And it is just talking about something which I find truly, truly amazing. And I published a video the other day saying to our viewers, can a pixel be worth more than your house? Well, it may be, no, it may be, but it's worth looking at it, because the words decentralization, disintermediation, and metaverse are going to be much more common than what we imagine. It takes me a little while to pronounce them properly, but we're going to be getting used very, very quickly. Noelle, it's been a great pleasure. Thank you so much for your time. I'm sure that we will continue this discussion with a lot more questions from our viewers, and hopefully you'll have some time for us. Thank you very much for your time.
Thank you so much, Danielle. So much fun talking to you about this.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.